Hi, this is Zeeshan Hasan, a tutor of financial reporting at 7. Well, as you can see, examiner's report. Uh, Either you are repeating the financial reporting at 7 for your next attempt, or either you are studying it the first time and you are preparing for the exam first time, you must read or you must watch this video completely so that you know the others who made them in the previous examinations who made the mistake, you should not repeat them. Okay, and so I'll be doing the complete analysis of what the examiner is saying, what mistakes you did make. Let's do this. But yeah, let me give you my firstly my WhatsApp number. Okay, this is my WhatsApp number. If you have any queries, any questions, you can ask me. Okay, so this is +92 if you are out of Pakistan, and if you're from Pakistan, 0302177706. Very easy to remember WhatsApp number, right? So let's start with it. Section A. Well, here we look at four Section A questions which will prove to be challenging for the candidates. Okay. Question one. Fazier company has leased motor vehicles, laptops, and mobile phones during the current financial year. Fazier company has no other leases. Okay. Which two of the following statements regarding recognition exemptions are correct in accordance with IFRS 16 leases? A lease that has which two of the following statements regarding recognition exemptions are correct? Okay. Uh, a lease that has term of 12 months or less must be expensed on a straight line or other systematic basis over the lease term. No. A lease that has a term of 12 months or less may be expensed on a straight line or other systematic basis over the lease term. Yes, this is the right. Fazier company can apply the exemption or low value underlying assets to all its new leases. Sorry, new leases. No, the election for leases for which the underlying assets it is of low value can be made on a lease by lease basis. Yes, this is the right one. So, what does this test? This question tests labels learning outcome. IFRS 16 candidate needed to know that for short-term leases and for leases, uh, you know, for which the underlying asset is of low value, a lessee may elect not to apply the requirement for this recognition and measurement. These exemptions are not mandatory. So, what are the correct answers? They were B and D. C. Okay. So, as the exemptions are not mandatory. A lease that has a term of 12 months or less may be recognized and measured as a lease. Okay. For lease that have an underlying asset of low value, the exemption may be applied based on each individual lease. Each individual lease. Okay. So IFRS 16 specifically given the example that leases of cars would not quantify as leases of low value assets because the new car would typically not be of low value. Where did candidates went wrong? Okay, more than half candidates seriously incorrectly selected A, believing lease exemptions to be mandatory in general. A wide range of combinations of answers suggested that candidates may have guessed answers. Okay. Next question two. Offer company acquired 80% of the Bins company ordinary equity shares on 1st January. X4 when Bins company retained earnings were $4.2 million. Offer company measured the non-controlling interest at fair value at the date of acquisition, which was 3.2 million. Okay. Extracts from the financial statements are as follows. Statements of financial position, equity, share capital 2 and 2, retain earnings 12.4 and 7.6 million, revaluation reserve 2.8 million, and 2.6 million. Total equity 17.2 and 12.2. Okay. Ben's company revaluation surplus of 2.6 million arose post acquisition. Okay. Match the correct amounts which the items to be shown in the offer group's consolidated statement of financial position as at 31st December 2004. So match the correct amount with the items to be shown in the offer company. Okay, here it is. What does this test? This question tests SLO's IFRS 10 consolidated financial statements. Candidates needed to know that NCI are apportioned a share of both post-acquisition profits and other post-acquisition gains, such as revaluation increase. Okay, what are the correct answers? Here is the correct answer. You can see 2.8 million parent plus 80% into 2.6 million share of subsidiary, 2.8 million plus 2.1 million, that is 4.9 million. Non-controlling interest 3.2 million, fair value 20% into 7.6 million minus 4.2 million. Profits are 2.6 into 20%. Revaluation surplus 3.2 million plus 680,000 plus 520,000. So it is 4.4 million. Where did candidates go wrong? The most common error was that candidates ignored the NCI share of the subsidiary's revaluation surplus, incorrectly calculating a amount of 3.9 million. Why? Hmm. Okay. Some candidates apportion 100% of the subsidiary revaluation surplus to the group. Okay. Next question. D-Log company and Rating company are competitors within the same industry and are in an inflationary economy. D-Log profitability ratios are consistently higher than of those Rebim's company. The two companies' accounting policies are consisting except for okay. Identify by clicking the relevant boxes in the table which company each of the accounting policies is it belongs to. Use of the first in first out method rather than the weighted average method. Use of cost rather than the revaluation model for calculating the carrying amount of property. Okay. What was it? This question asking? This question and the comparison different accounting policies, ratio analysis. Candidates need to consider the impact that income and expense have and on the profitability ratios. Okay. The correct answer was D-Look company for both statements. Okay. D-Look company will have comparatively lower cost of sale. The first in first out method in an inflationary economy would mean that the less costly inventories are transferred to cost of sales first. Therefore, profit and profitability ratios would be comparatively higher. The weighted average method would instead mean that more costly inventories increases the average cost that are transferred to cost of sale. Dealer company will have a comparatively lower depreciation charge using the cost model to calculate amount of property in an inflationary economy would mean that property would have a lower carrying amount. Okay. Revaluation model was being used. Therefore, the depreciation charge will be comparatively lower and profit will be comparatively higher. Now, my favorite part, where candidates go wrong. Okay, so there was a variety of combinations, okay, provided which suggests that perhaps candidates did not know how to approach the question and guess at what correct answer could be in such questions. Candidates should always break down components of the ratio to check. Got it? Remember this. Which two of the following statements regarding the International Accounting Standard Board's conceptual framework for financial reporting are true? It assets all parties to understand and interpret IFRS. It does not override any IFRS and requirement of IFRS accounting standard. It introduces enhancing qualitative characteristics of relevant and faithful representation. It introduces materiality as an entity specific aspect of relevance and nature only. What does this test? Okay, can you conceptual framework? Okay, what are the correct answers? A and B. Now, C. Conceptual framework lists the fundamental qualitative characteristics are relevance and faithful representation. It also states that materiality is based on nature or magnitude, not solely magnitude. Qualitative and quantitative. Okay. The conceptual framework lists the enhances qualitative characteristics as comparability, verifiability, timeliness, and understandability. Okay. Now, section B. Test candidates' knowledge in several IFRSs. We have select a case that examined IS 141, IS 2 inventories, IS 8. Oh, okay. Note that from March 25, IS 8 has been amended and is now the basis of preparation of financial statements. This follows the issue of IFRS 18 presentation and disclosure in financial statement. This impacts the syllabus from September 2025 onwards. That means from September settings. Although IS 41 and 8 are comparatively short IFRSs, they are equally as examinable as other IFRSs. Most candidates did not perform well on this case. Let's do more selective studies. Candidates must read the case scenario and its requirements carefully. Each object test question is worth 2 marks, and so it is important that candidates do not misread or misinformation in the scenario. I always say read the requirement at least 2 to 3 times. So, timber company maintains thousands of acres of land on which it grows trees, which are later harvested by cutting them down. Its year-end date is 31st March. Timber company primarily sells and process harvested trees. In March 2003, timber company harvested 800,000 cubic meters of trees at a cost of 56 meter per. The sale price is 75 per meter and selling costs are 3 per meter. As a byproduct, the timber company sells 750-liter bags of processed wood chips at a price of 185 per bag. The wood chips are the result of processing the harvested trees. So far, so good. Okay, so here it is. Use the tokens to ensure that the following statements correctly describe the agriculture, produce, and biological asset in accordance with IS 41. A living animal or plant, manufacturing process, inventory derived from chemicals, biological assets, harvested produce, organic produce. What does this test? IS 41, okay. The definition of the agriculture produce and a biological asset. What are the correct answers? What are the correct answers? C. First, agriculture produce is the harvested produce of the entity's biological assets. A biological asset is a living animal or plant, and trees are therefore biological assets, and they become agriculture produce when harvested. Well, example of assets include dairy cattle, bushes, and fruit trees. Where did candidates go wrong? Candidates performed well on this question, with most candidates correctly identifying the tokens to complete the two statements. However, many candidates confuse harvested produce with organic produce. IS 41 does not refer to whether or not produce is organic. Question 2. In accordance with IS 41, how should each cubic meter of harvested trees be measured at 31st March X3? Fair value of 75 only, fair value of 75 less cost of harvesting trees of 56 million, fair value of 75 less cost of 3 only, fair value of harvested trees of 56 only. Again, it tested IS 41, needed to know, unlike IS 2 inventories, IS 41 applies to fair value approach. The correct answer here was C. C. Agriculture produce harvested from an entity's biological assets in measure at fair value less cost to sell at the point of harvest. In this case, the fair value of the agriculture produce harvested trees is 75. Selling cost at 3. This is similar to the concept of net realizable value under IS 2. Where did candidates went wrong? Only half of the candidates answered this question only. Most candidates who answered incorrectly selected D and incorrectly deducted the cost of harvesting the trees. This expense would instead be transferred to profit and loss. At 31st March, timber company had 500 bags of wood chips in inventories. During the year end 31st December X5, the following overheads are incurred. Fixed production overheads 180, variable production overheads 198, total is 378. Selling costs were estimated to be 163,500 for the units produced. The timber company observes overheads on the basis of units produced, which of the year ended 31st March 4,200 bags. This was equal to budgeted production. What are the total overheads which should be included in cost of closing inventories at 31st March X3? What does this test? This question test IS2 needed to know how much absorb cost of production into cost of closing inventories. What is the correct answer? The correct answer is 45. That is 45,000. Okay. So actual production was equal to budgeted production. Fixed overheads do not need to be restricted. See how total absorption of overhead cost is closing inventory 4,200 divided by 500 bags into 378 total production overheads 45,000. The question specifically asks for the overhead cost to be included in the cost of cost. Closing inventories, therefore, comparison to net realizable value was not required. Where did candidates go wrong? There was an equal split of candidates who selected 45 or incorrectly 378. The total overheads need to be apportioned to the 500 units. Some candidates calculate the correct amount but ignored the required rounding and incorrectly entered 45,000 or 45,000 rather than 45. Avoid this. See, by the silly mistake, you just lose 2 marks, which could be the difference of 48 and 50. Indicate by clicking on the relevant boxes in the table below whether each of the following cost of formula is permitted by IS2 inventories to calculate the cost of inventories. First in, first out, true or false. Last in, first out, weighted average cost. What does this test? IS2. Okay. What are the correct answers? The correct answers are true, false, and true. Okay. LIFO is not permitted by IS2, whereas FIFO and FO are. Okay. Where did it candidates who go wrong? Most candidates answered the question correctly. For those that didn't, all three methods were incorrectly selected. This should have been the correct only. It's the simplest of the all. We are studying it from F3 level, FA level. Question 5. At 31st March 2000 X3, timber company has cut timber that has been processed and will be sold to building merchants in the year end 31st March. Question 5. At 31st March, timber company has cut timber that has been processed and will be sold to building merchants in the year ended 31st March for the preparation of its financial statement for the year ended 31st March X3. It was decided to change the inventories valuation method. A schedule showing the inventories valuation using this method is provided below. Okay. What is the impact of the cost of sales for the current year ended and due to the change in the inventories valuation method? What does this test? The question test labels area learning outcome and IS8 accounting policies, changes in accounting estimates and errors. Candidates need to know how to account for a change in accounting policy for inventories. What is the correct answer? It is B. So cost of sales for the year is calculated as opening inventories plus purchases minus closing inventories. A reduction in opening inventories will therefore decrease cost of sales. A reduction in closing inventories will increase cost of sales. Where did candidates go wrong? An equal spread across all four options suggests that candidates may have guessed the correct answer. Next question. Longman for required candidates to demonstrate and apply knowledge from the analyzing and interpreting financial statements area of the syllabus. From the perspective of the long and core, the question had both numerical and additional information. The question, the second task, in fact, included a convertible loan note for which both calculations and journal entry were required. This shows candidates that other areas outside of Section C may be examined within such questions. The analysis and interpretation of individual companies is an important area of syllabus. Okay, we all know that. So, as in previous examination sessions, most candidates failed to score high marks on this question. The reason was seemed to be poor exam technique. Seriously, now what is that? Not addressing the requirement, not adequately using the information in the scenario. Repetitively you guys doing this. Okay. The focus for this detailed commentary, rather than simply recreating the suggesting solution, will highlight the importance of using the scenario. Requirement A 4 marks calculate the using the pre-formulated table providing and excluding the gearing ratio, equivalent ratio for long and co for the year ended 31st March to compare to the sector averages. This part of the question was as SLO and the calculation of financial ratios. Candidates need to know how to calculate gross profit margin, operating profit margin, return on capital employed, inventories turnover. These are all very easy. And the current ratio, sector specific ratio. There were seven financial ratios in total to be calculated. Pre-calculated sector averages were provided as the comparative results. When calculating ratios, candidates show they are working in full. The workspace provided to candidates included pre-formatted responses that encourage candidates to show workings. Okay. In the calculation of ratios, common errors included C. What blunders you did make? Applying the wrong measure of the profit in operating profit margin and return on capital employed. Uncertainty as to what to include in capital employed. Seriously, uh, incorrectly using measures rather than cost of sales in the calculation of inventories turnover period and the trade payables payment period. Prepare the then requirement B, prepare the manual journal entry to correctly account for the convertible loan notes and having adjusted the relevant line items, calculate long and company gearing ratio. This part of the question tells specifically the calculation gearing. However, before this can be calculated, the question tells candidates need to know how to calculate the debt and equity elements of convertible debt before making a correcting. Okay. Most candidates, but not all, attempted this requirement and understood the need to split the proceeds of issue between equity and liabilities to reflect the substance of the transaction. The calculation of the liability element was not well performed. Okay. It was noted most candidates did not read the information which stated the proceeds had already been recorded. Other reserves within total equity, consequently, common incorrect answer was to recognize the correct journal entry. Some candidates presented journal entry with imbalanced debit and credit sides, and in journal, many candidates confused debits and credits. Gearing ratio, this was poorly performed. It's a simple thing. Two common errors for this candidates who did attempt the calculation were that the incorrect gearing ratio was used despite the question clearly stating that gearing was to be expressed as debt divided by equity, or there was no adjustment to debt. Candidates should note that on-figure rule applied where incorrect amount journal entry was correctly applied to the ratio calculation. The on-figure rule may only be applied if clear working are presented, and this was not the case. Now, the lastly analyze the financial performance and the position of the long-end company for the year ended. Okay, this part of the question, including the interpretation of financial non-financial. Okay, the performance and interpretation candidate to be poor. It was poor. Candidates are advised to read the following advice carefully so that they can be better prepared. Now, what's the advice here? It is the main concern is that students provide generic answers that fail to make good use of the information in the scenario. No marks will be awarded for stating the constitution part of the ratio calculation or what the ratio means in general terms, nor will be awarded for stating that a ratio has increased or decreased. Instead, a good answer will reflect on the key information from the scenario or it may have impacted the ratios. This is what I always say in my classes that you should not only calculating and stating either it is increasing or decreasing. If you would have followed my exam technique, this would have been done much better and very easily. So, for example, the opening paragraph of the question identifies Long and Company as the largest supermarket chain in its country. A candidate should therefore consider that this is likely to result in economies of scale, better negotiating power. This supports Long and Company's higher gross profit margin compared to the sector average of 13% and its longer tax payable payments of 79 days compared to 65 days for the sector, making this is an appropriate comment to include. Where use of the scenario is inappropriate, marks will not be awarded. To illustrate this point, many candidates commented that the opening of the budget stores in the year would have caused the difference in gross profit margin. This comment was incorrect as the budget scores would have resulted in comparatively lower of not higher gross profit margin for long and company budget supermarkets operate on high volumes of sale at lower margins. When reviewing the ratio differences, candidates should also consider the accounting impact of the convertible loan notes. And fact, long and company owns rather than leases its rentals. This shows a fundamental misunderstanding of IFRS 16. A lease providing there are no exemption used in reflected the statement of profit dollars as depreciation on the right of use asset and finance cost on the lease liability. Markers noted that where candidates did use the scenario, they often fail to develop their answer to explain how or why the ratio may be affected. For example, Langen Company relatively higher inventory days are often attributed to the home furnishing agreement to score well. The candidates need to consider why this might be and suggest that home furnishings are likely to have a slower turnover compared to food. This point could be developed further to observe that inventories of home furnishing are not perishable. High inventories delay is not necessary cause for concern. Well-developed points such as this will result in strong mark in this question. The above example illustrate the importance of obtaining a good appreciation of key points. A mark is awarded in all analysis questions for providing a short concluding paragraph specific to the scenario. In the case of Longend, it was nothing that, although profitable and liquid, the opening of the budget stores and the new home furnishings agreement introduce risk for the future. Candidates are encouraged to separate headings for the conclusion. To Piloto company in the numerical style question, it is even more vital that candidates show their workings and full workings can be either shown separately or can be included within a cell in the response area. Spreadsheet. Some candidates use a calculator tool instead of spreadsheet functionality and do not provide workings. When this happens, candidates will only score full marks for a correct answer. But if the answer is incorrect, in the absence of a relevant working, no marks will be awarded. The marking team will always award credit for own figure consequent marks, but this is only possible with accompanying workings. Tabulato company is an example of a consolidated financial statement presentation. Questions covering syllabus area D additional information is presented will require adjusted in accordance with the relevant IFRSs. A short narrative requirement or equity accounting was also included. The requirement of accounts preparation question will vary. However, you can expect to be asked to prepare one or more of the following: statement of profit or loss, statement of profit or loss at the comprehensive income, schedule of adjusted profit, statement of financial position, statement of changes in equity, extract from an individual statement of cash flow. 16 marks, stipulated company group, statement of profit or loss, and other comprehensive income for the year ended. Okay. This part of the question test various IFRS 10, know the impact of the consolidated. Okay. The performance of this part of the question was mixed. When asked to prepare a consolidated statement of profit and other comprehensive income, examining team recommended that candidates set up a pro forma for the consolidation immediately. Once the pro forma has been set up, candidate should include the results of the parent and subsidiary for income and expenses on a line by line basis. However, candidate must check when the subsidiary was acquired. If the acquisition took place 12 months ago or more, then candidate should add the results of subsidiary in full or current year. It was a mid-year acquisition. For this question, I have a full video on my YouTube channel. Okay, you can watch it and look at it, prepare for it. Then candidates must time apportion the subsidiary results accordingly. In this question, the acquisition of the senior company took place on yes, 9 month apportionment was needed. C, the revaluation increase relating to the Steiner company and transaction recognized in the statement of financial position and should not be time apportioned in the okay. Workings may be presented separately. Okay. C. Or it should have been done. The share of profit of asset relates to the note 5 were left for this when setting up the pro forma. But candidate could also add this in later by inserting a new row or leaving a line between each profit or loss. The examiner team noted that a number of candidates adjusted the subsidiary results incorrectly by either time apportioned by incorrect number of months. By not this time at all, candidates are remained that a statement of profit or loss is summary of performance for a period of time, and therefore failure to time apportion is considered to be a fundamental accounting error. Many candidates applied proportion consolidation by multiplying the results of the six subsidiary by 80%. Again, this is a fundamental accounting error. Okay, you are required to split between the profit and total comprehensive income attributable to the parent shareholders. Ignoring this section can be completed later, but the including in split workplace at the planning candidates are likely to ignore this altogether. Okay, you can see here the example. So next, candidates can deal with the information in notes 1 to 6. Candidates can tackle this adjustments in any order, but for the purpose of this report, they will be deal with numerical order, as you can see over here. See how you should have done. See, full 12 months, many candidates, both errors amortize it by 20 years. And for candidates are remain to be careful of adding dates, my friend, dates are very important in this exam. Always be careful about the dates and see examiner is complete. complaining about it again and again. Intra-group, see, only 75% of the goods have been sold outside the group at the year end, meaning that there are unrealized profits in inventories totaling 25% of the original purchase, unrealized profit based on the 25% markup. Now, again, intra-group trading, many candidate adjusted investment income by remaining the full 1 million. Some credit was awarded for this. See the genericity. Read carefully and note down any non-controlling interest dividends paid outside of the group. Okay. Note 4, revaluation increase is discussed in the opening paragraph of this section. Oh, yeah. Note 5, stipulated company acquired 30% of the share capital. Okay. Many candidates deal with the associate correctly. Most common mistake was not to time a portion. C, the last adjustment, I guess, yeah, this adjustment relates to the parent entity, is not related to the consolidated. Initial accounting for the loan was been correctly accounted for, and candidates were required to deal with the subsequent measurement of the loan note in accordance with IFRS 9. The loan notes will be subsequently measured using the amortized cost method. Effective interest of 12% should be added. Okay. 4 marks, explain the principles behind accounting treatment. Okay. The part of the question of also tells candidates need to know how to explain the equity accounting treatment specific to hardcore company and the stipulated groups consolidated statement of financial position. So that's what you should not be doing in the future. And if you have any queries, any questions, anything to ask, here is my WhatsApp. That's it for now, and good luck.